Hey guys, it's Wolf Lopez here. Welcome. Love to have you here. So in this video, we're going to talk about thinking in years. This is a very important concept. A lot of people are short-term thinkers. Everybody thinks very short-term. And if you want to become a very successful investor, you need to think in years. And what this means is basically a couple of things. The first thing is today's September of 2022, right? So this year that we are living right now, as I'm recording this, is 2022. Right now, this year, a lot of people are thinking what's going to happen this year. Okay, don't do that. Think about what's going to happen in 2023. Okay, when you do this, let me know. Let me show you what this means. So, for example, think about in last year, 2021. Okay, was the year of the bull run, right? If you would have here thought what's going to happen next year, you would have started selling, right? And the chance of you have started selling as everything was up, like I was selling here because I was here back here in this bull run, and I made the mistake of not selling here, so that's why I knew that's why I sold here, okay. But a lot of people, if 2021 was your first bull run, you probably didn't sell. Okay, that's okay. Okay, so but just know that if you like I'm talking about in these videos, like I'm showing these concepts that I wish that somebody would have you know showed me. I had learned the hard fucking way. It's sad because right now I don't I would already have hundreds of millions of dollars if I would have learned this, but nobody talks about this. That's why these videos that I'm creating are very important. I help you to cut the freaking learning curve. It's the best investment. Like this video, for example, is completely free, right? And I hope that you take action on this. So yeah, so think in years. So instead of thinking what's happening this year, start thinking, okay, what's going to happen next year? Okay, and when you hit that, you're like, okay, because here's what I think that is going to happen next year. So in bull runs everything gets overvalued, right? And in bear markets everything gets undervalued, right? Because of the 25 cognitive biases. Now, so what next year? How can we have a new bull run? The new bull run comes when when there's something new, there's new technology, or kind of like new user adoption, because what is lacking in cryptocurrency right now is user adoption. And to get to the user adoption, we need to build more stuff. So right now in the bear market, there's tons of people, developers building stuff, but the prices are going down, and this is massive opportunity, dollar cost averaging in blue chip projects that are building, and the next bull run, boom. Okay, so with that being said, in the next year 2023, there is a lot of building is happening right now here. So in the next 2023, I believe that we will start having a new bullish momentum, because we are building so fast, it's happening so fast, okay. And so that's why I'm buying right now, because the prices are insanely low right now. If you look at the markets, look at the Ethereum is 1.3k, Bitcoin is $19,000, okay. And there's others this stuff, but I think that we are going to go, the probability right now, what I think that is what's going to happen. We are still going to have this kind of, like, we probably have the one crazy dip left here, which is going to be insane. People are going to freak out, whatever, and then we are probably going to have momentum start building up, and then the next bull run, right? So start thinking here, like start thinking like what's going to happen in 2023, and act accordingly, you know and that's what a lot of people miss out. They are looking for the best buying opportunity, the right moment to buy, and that's foolish. You know why? Because if you have that mentality that you're always looking for the best deal, you're always looking for that one, like you're always looking for that kind of like the lowest point to buy, then you will, in the bull market, you will look at the highest point to sell, right? Because it's the same mentality, it's the same habit. Okay, so if you have that habit in the next bull run, for example, here Ethereum was at its peak. So we had in 20, well, let me show you here. In 2021 we had like 7 months to sell over $3,000 Ethereum. 7 freaking months. Okay, 7 months to sell at over $3,000, and then it peaked at $4,000 for a while, but it was very short period of time. But we still had 7 months to sell. Okay, here. So same thing with bear markets. It's not going to like it's going to go pretty fast. If you have been look like think about how fast life moves on. The bear market will go faster than you think. Look at this. This has repeated. This is exactly how this has repeated since 2011. I have mapped this shit out. Look at this from 2011. This is what has happened. You know why? Because it's exponentially growing industry. Guys, I am telling you this. Of course, there's always a black swan event. Some people have been talking about like that. What happened? What if we had this kind of like after dot-com bubble, there was 10-year bear market before the next bull run. Like if that happens, that is literally the best case scenario. I could buy like absolutely ridiculous amounts of currencies at that point, moment. But I don't think I think that because cryptocurrency is open source, it's evolving fast. It is evolving fast, okay, and but there's this saying that if the pattern, like as soon as everybody catches the pattern, that's when it changes. So there's definitely possibility for this to change. But think about when we were in the bull run, everybody was talking about like this is a new paradigm. This is a super cycle. This is going to be 5-year bull run. And look what happened. No, the freaking cycle repeats. The cycle repeats. Look at here. It repeated. Everybody was like here, okay, this is going to be next cycle. And it's exactly what happens in the top. It's going to be go over and over again. It's never going to stop. And that's when it crashed. So here people are here people are saying, okay, so this is going to be a 10-year bear market, blah, blah, blah. I don't think, So I think it's going to be repeat. So, and right now we are here. Okay, so right now I'm adding risk. I have stable coins and I'm buying. Okay, I am adding risk. And here, when the prices start going again like crazy, I will de-risk. I will start selling. A lot of people sell here because the prices are going down, and then they buy here, and that's why they are broke. So this channel, the point of this channel and the point of my membership and everything like this, I help you to become wealthy. Okay, so I mean, take this information. I'm not a financial advisor, but this is just information. Okay, that you can take here. This is very actionable information. So okay, so 2023, I think we are going to keep building, and there's a high possibility that we are going to start building momentum in the next bull run. So that's why I'm already buying for the next bull run. I'm already buying. I'm dollar cost averaging in. Okay, slowly. Okay, so that's that. And another thing that when you start thinking in years, is that the longer horizon you can think, the bigger your gains will be. The reason Charlie Munger and Warren Buffett are so wealthy is because they hold for 5 to 20 years, and better yet, if you can hold for the rest of your life. Because if you hold asset for 20 years and it's a great asset, it will make you like hundreds of millions of dollars. Okay, because the growth is just insane. It will compound like freaking crazy. And 5 years also. Okay, so I'm just hoping as I'm buying these, and in the next bull run we have a crazy the bull run here. I de-risk some, but I will keep some, and then again I will buy in the next bear, and then it repeats. Okay, so that's that. In that case, it's like 5 year cycle, 5 to 8 years here, 5 to 8 years, and in that point, like it has compounded like freaking crazy. So that's why I only buy blue chip assets that can survive. Like a lot of people send me like they go to the page of, let me show you here. They go to the freaking page of somewhere here. Let me show you here, and then they look at some new layer one. Let me show you, like something like this. People link me stuff like this. Okay, this all. What do you think about fin blocks? I'm like, like there's not like no one is using it. Okay, so it's very high probability that it will go to freaking zero. Okay, because it's like I've been talking about. Read the book Crossing the Chasm. It's very hard to go from 0 to 100. So from 0 user adoption to actually adoption, it is insanely hard. It's called like the pitfall of it's the pitfall of new companies. These are all, by the way, startup. We are basically venture investing at this point. And venture investing is different from value investing, long-term value investing, in the sense that long-term value investors like Charlie Munger or Warren Buffett, they look out for value, that like in real intrinsic value, meaning real user adoption, real cash flow. Okay, and then they look at that real value, and then they look look it, that try to find it undervalued, and then they compare that to the other opportunities that they have, and if it's better opportunity and it's undervalued, it has tons of intrinsic value, then they buy and they hold for like 10 to 20 years at least. That's value, long-term value investing. Venture investing, what like Naval Ravikant, what he does is he buys new companies that have zero adoption, and he buys tons of Naval Ravikant has probably like over 200 companies in his portfolio, something like that. It's crazy. So he buys a stake at very low prices, and like a lot 80% of them probably, I haven't looked at the real stats, but I would imagine like 80% of them to go to freaking zero, and then some of them will go and they become this new unicorn thing, and it makes tons of money for the venture investor. Okay, so those are kind of like the whole value invest, long-term value investing versus venture investing, kind of like the works. And my takeaway is I use kind of like both. Okay, that's what I have found right now that I want, that I'm going in with, because you need that kind of venture investing in cryptocurrency because everything is so new. But at the same time, I'm looking for that value. I'm looking for that real intrinsic value, user adoption, the cash flow, and then I'm looking for, is it undervalued? And right now everything looks out pretty undervalued to me. So I'm buying. And also with venture investing, yeah, it's riskier, so that's why, let me show you, that's why I always, you want to manage risk. So here, this is one of the most beautiful pictures I have basically drawn here. I really took my time here to color this and all. So smash the like if you liked. Anyway, so uh, so yeah, so high caps, 50% high caps, which means, so the higher the market cap, the high the lower the risk. And what market cap means, let me show you. Let's look at Bitcoin, for example, and let me show you the market cap. So you can see the market cap here is 364 billion, right? So if you look at here, the market cap is calculated, so you let me show you here how it's calculated. So you take the price of the coin. So let's look at here, 19,040 bucks times the current circulating supply, not the max supply. This is in the future, but this is what the supply is right now, and then you times it by the supply right now. Okay, and then you have 364 billion. You can see here. Okay, there's a couple decimals because I didn't take the exact, but you can see. So this is how market cap is calculated. And what market cap indicates is that it indicates how much money is in that thing. This is it's used to, it's stocks and just everything, but this, we are talking about cryptocurrency, so you can see the cryptocurrency market cap here. So and business, so it means how much money is in there, and the more money is there, the bigger it is, and the bigger it is, there's more liquidity, and the more liquidity there is, it's going to draw more big players. Because if you're playing with millions and hundreds of millions of dollars, when you buy something like something like, I don't know, let's take something random, when you buy something like Rocket Pool here with like 50 million, the price will go nuts, and if you sell a lot of it, will affect the price a lot. But so the more liquid it is, it attracts bigger players. Okay, so that's so which means that it's safer, in a sense that the more money there is, it's safer. It can't go that much down. But if it's a low cap with low market cap, there's not that much liquidity. If someone starts selling, it can easily just like pitfall to like 90% down, and these only take like 60 to 80% down. So these are, so when you manage risk, you want to have higher market cap, so it's less risky, and it's also less, if there's more money, it's less risky to go down to zero. But it's possible. Look what happened, for example, Luna. It is possible to, so it's not saying that it's 100% like secure, but it's way more secure if it's high cap. So I have the 50% of high caps, then mid caps are middle caps, so, and low caps are those are the dank stuff. Those are the very 100x to 1000x gains. They're very interesting, but they are very risky. Very risky. If your portfolio is full of low caps, it's high probability that you will have a gambling addiction and you will lose all your money at some point, to be honest. I want to always tell the truth to you guys, because a lot of people, a lot of YouTubers also, like, they don't know what, like, it's just great. But anyway, so I have read books, read tons of books, guys. The more you read, the more you earn, basically, because there's a good good book from Howard Marks. So listen, guys, look at Howard Marks. You can also find some of his videos on YouTube. There's tons of like stuff there. Howard Marks. Okay, so that's that. Anyway, so he talks about, so the most important thing, and he talks about creating a portfolio and just like how to think about investing. You need, like, I've been talking about first level and second level investing. So these are all concepts from the books that I'm applying to cryptocurrencies. And what else? Okay, so here we have dollar cost averaging. So we want the dollar cost averaging in. We don't want to ape in on this. Okay, so as you create the managed portfolio, you don't want to ape in on it. So you want to actually take the budget, how much you want to invest. So I did a poll on my YouTube channel, and a lot of people, like majority of people, said that you have like $10,000 to invest in this bear market, which is great. Like if you think about like 10K, you 10x that. How much is it? It's 100K. Okay, and if you 100x that, that's a milli. Okay, 1 milli. Okay, so it's a very possibilities that you can make tons of money with just 10K investing if you do it wisely. And anyway, so I have a 12K, so it becomes like easier to understand. So so you divide it by 12 or 6 or just any months of months that you want. The higher the months that you divide it by, the safer it becomes, because it's a higher time a higher time frame. So if you divide it by 2 months, it becomes more reckless. If you divide it by 12 months, it becomes more safe, because you have more, the markets will fluctuate, and in the next 12 months, the dollar cost average price will be great. So, you just divide it, and then every month you just buy like a robot. Okay, you don't care about if it's going up, down, sideways, upways, skyrocketing, down, pitfall, anything. You just buy, boom, 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 for the next 12 months. And after that, you have built a position. And here's more advanced concept that I'm going to go more depth into in the later on. By the way, if you want to check it out, my stuff, you can check out the first links in description. I'm creating a new, so you can join my newsletter. You should join my newsletter. There's tons of like stuff in the description. Check that out, and go to wolflobbies.com. So what I'm creating, I'll talk about this later in the membership, is that 50% high caps, right? But the next part here is where it becomes important, in my opinion. So these are more advanced concept. I will like flesh out this concept later on, because it's not relevant right now. But this is what I have learned from my multimillionaire friend. This guy is very, very smart, and that kind of like this kind of like his method. I have never heard anybody else talks about this method, but this is extremely well like thought out and very good for kind of like this type of investing that we are doing. So basically 50% high cap assets, high assets with low risk and high returns, right? Because that's still possible in cryptocurrencies, and the reason for that is because it's a new kind of an investment vehicle. If you look at the older investment vehicles that have been around, for example, like stocks or real estate, the generations before us. So you're probably a millennial if you're watching this. You're probably, or Gen X or something like that. So you're probably like 18 to 41 years old or something like that. 18 to 41. So before the generation before us, so 25 and over, those people have already bought stocks and real estate's the best deals, so they are all overpriced. Okay, so there's literally no good deals there right now. But when it comes to cryptocurrencies, we are the first ones to buy this stuff. Like this is freaking gold rush, and we are here early. Okay, so that's why we have these lower risk but crazy high returns. For example, Ethereum. Okay, so I'm buying tons of that, and so it's a high cap in my portfolio, like 10x returns with very low risk, in my opinion. But other assets in my portfolio, I want to have at like a max 5% of the portfolio in that assets. I want to have tons of different assets, blue chip assets, with 5% max in the portfolio. And as for example, one asset goes to like in the next bull run, like it becomes like 20% of the portfolio, I will sell 15% of the portfolio, leave that max 5, and then roll back into other assets or new assets or something like that. So this automatically organically grows the portfolio to the freaking moon. It's insane. It will just double, triple, quadruple it will just like freaking explode the portfolio. And that's one of the secret one of the secret sauces that I'm going to show you in the next in the next bull run. And as I'm doing it, it's going to be wild as freak. Okay, I'm telling you, it's going to be wild. So stick for a ride. It's going to be a fun ride. You're right now, by the way, right now you're OG. Like you are not leaving. We are not freaking leaving. Look at the markets. It's happening. People are sad. People are just what's happening. People are just all over scared. The world is literally just burning. People are freaking out. We are not freaking leaving. Okay, we are going to cash out in the next bull run. We are going to become so freaking rich. Okay, let's go. I'm not a financial advisor again, by the way. So you understand that there's risk in everything. Like so Jim Rohn always talks about this. Since we were born, like since we were babies, everything's risky. Like as I'm recording this video right now, it's risky for me. Like it's risky. Like everything is risky. When you go outside to the public, it's risky. When you sleep in your bed, it's risky. Everything's risky. So, I am willing to take the risk to change my freaking life. Okay, so I hope that you're with me on this one. I'm not a financial advisor. Take accountability on your own investment and on your own financial destiny. If you're waiting for someone else to save you, I mean, I have good news and bad news. Some people really want to help you. I really want to help you, but ultimately it's all on you. Like it's you can't blame no one else but you. Okay, I'm here to like show the right information that I wish that somebody would have showed me, but you are the responsible to take action and really form a strategy for you and just freaking make it. Okay, we need more people who just take action and just make it happen no matter what. You know what I'm saying? Like those are like I really respect those type of people. Like no matter the situation, everybody has struggles. Everybody has struggles. If you ask anybody, like what's up, they have struggles. There's not living soul here that's living on the roses, because you don't even want that, because the contrast of having problems creates the desire to do something and change it. And there's always there's a yin and yang. Okay, so anyway, but I'm just very grateful for this opportunity. This cryptocurrency opportunity is freaking insane, and those people who understand and are here with me and do this with me, I think that we are going to be very, very happy in just a couple of years. The other people who are just here to blame other people and just crying and don't take any accountability and don't understand the information that I'm sharing here, those people will regret in the next bull run. At least, I believe that they will regret it for the rest of their lives, because I don't think that we ever have another opportunity like this. Ethereum moved from proof of work to proof of freaking state. It took 7 years for them to do it. The issuance of Ethereum has gone like from it's like 4x the halving, Bitcoin halving. It's insane. Ethereum is becoming such a blue chip, and it's so undervalued. And I think in the bear market it's going to be even more undervalued. And on top of that, there's tons of other assets that I think that have a great opportunity, because they are leaders in the space. They have tons of user adoption. So the opportunity is absolutely incredible. But only if you take action. Only if you just freaking do it. Okay, thank you so much for watching. Check out Wolf Lopez for more information, and peace out.